Hello, everybody, and welcome back to the M3 Market Update. My name is Melody Wright, and I do this show to give you context around the information you're getting out there concerning residential and commercial real estate against the backdrop of the global macroeconomy. So welcome back. I did a show earlier this week you may have caught. I'm going to try to do 2 shows a week, one where I sort of focus on articles and data that we're getting, and then the other, maybe a deep dive, and then dive into some of the stats of, around inventory, as I typically do. So I hope you enjoyed it. If not, here's the regular show again, not too different. So anyway, guys, thank you for the support. Happy Sunday, happy weekend. It is Sunday, February 25. So we'll get right down to it. Just quickly want to talk about existing home sales that we got out there last week, which were actually kind of interesting. I just knew that existing sales would have to come in higher because people just got too excited about those rate moves at the end of last year. And, I think people would have been, and listen, I don't think people massage the data, but it's just kind of like you just knew they were going to come in higher. And that, of course, is seasonally adjusted. They came in higher at 3.1% for month over month, and then year over year down slightly at 1.7 year over year. But guys, here's where it gets really interesting. When you look at the non-seasonally adjusted, so again, we've talked about this in other shows, but seasonal adjustments, they tell you they do this so that, you can smooth everything out and it makes sense to compare year over year, quarter over quarter, things like that. Guys, just give me the raw data. I can look last year, see what happened. I can look at I can figure these things out myself. I don't need economists to seasonally adjust my data. And this is why. Okay, so remember I just said sales came in month over month, 3.1%. Well, guess what they were non-seasonally adjusted? Negative 21.2%. I'm just going to repeat that. Negative 21.2% versus the seasonal adjustments of 3.1. Okay, if you don't, there's some problems there. And then year over year, they were actually up 1.3%. And that's kind of interesting information to me as well. And if you remember last year, we were in the pits. Everyone in the housing market just thought there was no demand, rates were so high. And they did not see how the builders would come in and really entice folks. So I just, again, the way this data is presented matters. And, I think a lot of times it's like momentum, like a lot of times when you're watching sports and you're watching a football game and you can just feel that a certain team has momentum. And it's not about, at that moment, it doesn't actually become about the players. It becomes about the momentum. And so I think that a lot of times, and anybody that took statistics in school knows this, you can come up with a statistic for just about anything. And so when the momentum is going a certain way, it's just kind of funny how these things sort of work out. But in my 80 cities, so I use Redfin, and what's important about that is that Redfin tracks new and existing homes. Now, I've talked about this a ton, but out there in the media, they separate these two out, which in my opinion hides some very important information, especially now that the new builds have become 30% of the market. Historically, they were only 12%, but right now they're 30%. That is not immaterial. We should be looking at these two things together. But in my 80 cities, basically I had a month over month down 13% month over month. So that includes new and existing. We don't know how many new builds, what the mix is, because Redfin actually has fewer new builds than some other sites. I don't know for sure, but year over year, I actually came down. Sorry guys, year over year, I was down 2.97%, and month over month, I was down 13.4%. And so year over year was up slightly for the National Association of Realtor, and then down very significantly month over month. And I basically kind of saw the same thing, just down a little bit year over year, where NAR saw up. And so that's going to be interesting when we get the builders results this week. And so that is something I'm very much looking forward to. I may try to do this show tomorrow or when we get those builder results. I'm trying to figure all that out with scheduling. The other thing in the NAR results is that actually home prices came down 0.60% month over month. And so if you looked out there at, there were things like all-time highs. Actually, that's not true. When you look at NAR, we have been coming down for several months and we have not reached those peaks again, I think seen in May. And so if you check out my Substack called the Hornet's Nets, you'll see a lot of that information. It's in the free part. So check that out, which is the beginning of the Substack. But all of this is to say is that, when I try to share this information, I try to share data, right now it feels like Twitter, social media out there is a hornet's nest. I mean, people are just, even when you're just talking about data, they seem to get really, really upset. Or they make some kind of insult, pig face, things like that. That didn't happen last week. That happened about a month ago. But whatever it is, people, are just, they seem very angry. And I feel like if we were all getting rich, if we were to believe the stock market, I'm not sure why everybody would be feeling so angry. And so in the Substack this week, I talk a lot about how stock market sentiment, how, when we're doing well in stock market, it really drives consumer sentiment. And we saw in the consumer sentiment survey, which has been really low, and has been pretty low since COVID with some peaks and valleys. But over November to December, consumer sentiment shot right up. And that had to do, I believe, with what was happening in the stock market, and there is all kinds of mania out there. And guys, I know it's exciting. And if you have NVIDIA stock, you're probably looking at it and you're getting really excited. Words of caution here. This rally could go on for some time and I don't trade. I am not here to give you investment advice. I'm here to talk to you about fundamentals. And, sometimes the fundamentals really don't matter if you are trading out there and you're trying to make money on the momentum, on the flows that are happening in the stock market. But what's important for regular folks to understand is the stock market does not represent the economy. And that's the point that I want to get across. And, by the way, when we're in manias like this, the little bit of fire can really bring things down. And there is fire out there in commercial real estate, and there's a fire out there from a liquidity and collateral perspective. As these values come down, more collateral is going to be needed in the system. And so this is how we get set up for a credit event. And we are we're rounding the corner to the season of these things. March is typically when we have some sort of event. We have them in the fall and March. It seems like last year on my birthday, we had the bank failures. And, so my eyes are on kind of the treasury market, the bond markets right now to see if we are setting up for some sort of event, this spring. If not, we will, the election and politics mean that, there's going to be a lot of will out there to keep things sustained, throughout this year. And so I cannot dismiss the probability that there will be a complete dislocation from fundamentals throughout the rest of this year as we get closer to the election. But I can tell you that there are things just bubbling underneath the surface. And I believe as we get deeper into talking about sales, only 11 of my 80 cities had positive sales month over month. That is pretty significant, especially when you think about, Florida and California, they transact during these winter months. They don't have the same kind of weather we do up in the Northeast and even, kind of in the middle of the country. And Florida and California are huge housing markets, huge. They make up a big percentage of the overall market. And so the fact that we're down in sales is really significant. Okay, so in the Substack, I also talk about, Charlotte just a bit, my trip there. I hope you guys watched the video that Travis put together. He does such a great job with that editing. And there's so much good footage of what we saw in the outer rings of Charlotte. And let me just quickly take a minute because I think a couple of people have taken issue with the way that I talk about population in these cities. And so what I did last week is I took the Charlotte city population and compared it to Atlanta city population. A lot of people came back and said, well, Atlanta's way big, the metro is bigger. That's correct. I can't, apples to apples, it is very difficult to compare these cities. And I got to be honest with you guys, one person has an opinion of what that metro looks like versus another. In fact, there's the MSA. There's also another statistical combined way that you can look at these cities. But what's important is that what's happening in the city center matters. And that's why I focused on the city center. Because all of these things, the city center, the outer rings, the inner rings, this is one organism. Because you have to think about it this way. What attracts people to a certain location? Historically, suburbs have not really been the attraction. There's probably some exceptions to that rule for sure, where a certain suburb has kind of become an entity into itself, but it matters what is kind of around that city. And so when I will do better in the future, and my apologies, in telling you what I'm talking about when I throw out these demographic statistics, and just know that sometimes we have to make a swag because there is just no way to do an apples to apples comparison. But when we talk about Charlotte, it's a large city and a large metropolitan area. I think people are right that it's smaller, probably in miles and people, than what people consider Atlanta metro. But then again, some people will argue that not of all that's the metro. Anyway, we're not going to get into all those debates. But just so you know, American Community Survey is where I get these numbers. City population for Charlotte is 897,720. And the MSA, or the Metropolitan Statistical Area population, is more like 2.8 million. Okay, so these are a lot of people. But what's important is that Charlotte has had huge net migration in. Huge, guys. 2.6% compared to the national average of 0.5%. That's almost a 400% increase difference. And so to the positive, meaning that Charlotte has been a hotbed of, in migration. And we know that United Van Lines, and this is all in the Substack, came out and said that North Carolina continued to be last year one of the top destinations for movers. Now, United Van Lines, very different kind of, customer base than say U-Haul. So just keep that in mind. But I will tell you, I went to 3 North Carolina cities on this trip, and they are all building like everybody's coming there. And so in order to, fill what's being built out there in these 3 North Carolina cities, we would need that massive influx to continue. And I can tell you that, based on numerous studies, one, I mentioned the Substack by Hire a Helper, basically shows that we decreased relocation about 9% last year, but to the lowest level since people have been tracking it. Now, again, how long have these series been tracking it? Blah, blah, blah. We're doing our best here to triangulate the data to get a picture, because the census will come up with updated information this April, but that will be only until July of 23. So we're still going to be behind. It's very difficult to know exactly, but what we do know is that slowing has moved. And then I can tell you that structurally in Charlotte, to sustain that kind of growth, I was very excited originally about some of the toll roads and things that were going to happen in Charlotte. I happened to live there from 2013 to 2015. But when I went to visit last year, when I went to visit this time, none of those things seem to have alleviated the traffic problem. Now, of course, I've already had somebody say, well, because I actually compare Charlotte traffic to LA traffic. And for those of you that have to come down and go over to Ballantyne, I think you guys understand what I'm saying. But depending on your commute, that comparison may not make sense to you, but that's the problem with all this. We know what we know. We know what we see when we commute every single day. And this is why I always encourage everybody, take a quick detour, take a quick left turn, just drive around, see what you're seeing. Another thing that happens is, like out in Phoenix and other places, they put those big walls on the side of the highway. You can't even really see what's going on. And Travis and I saw that in North Carolina too, and Georgia. And so it's hard to know. And people then say, well, what about Zonda, who they track new construction? What about Zelman, who I immensely respect her work? Well, they don't track the local builders. And in the Substack, you're going to see a quick drone footage of one big massive site in Fort Mill. And if there's so much inventory coming online in Charlotte, closer to Charlotte, where you don't have to do that commute, and there's so much multifamily that's going to be competing, and there's so many rent specials, then, how is all of this going to get filled? And what is going to draw people to Charlotte? Again, when I talk about these cities, I'm not bashing them, guys. I want all of our cities in the United States to survive and thrive. But it's going to take us all, if we live in those cities, it's going to take us all demanding, thoughtful city planning and a plan to deal with some of this overbuilding, because in the Substack, I talk about, Charlotte's commercial real estate situation, which they have 30% of delinquencies of office space. One Wells Fargo went into receivership in October, higher than the national average. And having lived there, I know that even before, it was hard to kind of keep downtown, which they call uptown, busy over the weekend. And as that flight continues, that's just going to erode the tax base of that area. And again, what's going to attract and crime's going to increase. And so then the outer neighborhoods from that uptown, downtown area are going to have to deal with that. So, these things are impactful to cities as these sort of living organisms. So Charlotte, in my opinion, has, as a city, I think it has a lot of things to offer. But as the banks come under stress, which we talked about earlier in the week, Charlotte is going to have some tough times. And my hope is that somehow people can band together and be thoughtful about some of this vacancy and address, some of these downstream implications. So my outlook on Charlotte is, they overbuilt. There's hyper supply in many of the outer rings. There is absolutely hyper supply in multifamily. There's a chart in the Substack that you can check out. And so there is going to be price corrections there. Now, Charlotte, there are a lot of old neighborhoods there that I think will probably do just fine. But as we saw with the GFC, this stuff has a habit of spreading even to those locations. So quickly, just some more stats. According to the Fed, median listing price is about $400,000 in Charlotte. Redfin's sale price is about $2,500. But, here's some interesting stats. So change in median sale price year over year per Redfin is negative 0.13%, very small. Change in median sale price month over month, though, is negative 1.67%. And I can tell you in the cities I track, the number of cities with increases in sales concessions is growing significantly, about 26% increase month over month. Change in number of homes sold year over year, and this is significant, down 5.7%, and then change in number of homes sold month over month, down 24.4%. That is massive. Now, increase in inventory, we've seen month over month an increase of 5.72%. But year over year, inventory is down. But based on what I saw out there, they have plenty of inventory. There's over 3,800 right now listed on Realtor. And what we do know, and what I can tell you absolutely, is at the end of last year, the builders started pulling a lot of their inventory off of Realtor.com. And I can tell you from this last site visit, I feel very confident now saying that we are missing about 25 to 40% of both existing and new inventory on the listing site. So we cannot take that. What we need to look at those, what we can use the listing sites for are directionally, where are their numbers going? Okay. And so number of Airbnbs in Charlotte, 4,535, guys, that nobody needs almost 5,000 Airbnbs in Charlotte. There's just no need for that. Multifamily occupancy, according to Real Pages, is 92.9%. Now that is lower than the national average of 94.1%. And guys, I'll try to put these stats in the show notes, but they are in the Substack as well. The number of new build communities, 161. This isn't 161 houses. These are communities, and a lot of them are huge. I mean, they are not small. And you can see that in the video that Travis and I did. Number of new homes, 1,887. And again, that's what's listed on New Home Source. If you actually go to those sites, you'll see there are a ton more that are available. And so, what can I tell you? And then number of foreclosures, 192. Not a ton. I wouldn't expect a ton right now, but, fairly certain that number is going to increase. Okay, ton of information, I know. But please do check out the Substack if you can, and I will post some of this data in the show notes for you. Okay, quickly to our stats for the week. Just wanted to share the fact that, so like I said, only 11 of the 80 cities had positive home sales month over month, December to January. So here are the top cities with the largest percent increase in sales month over month, which a lot of them were California, but and New York and a couple select locations on the East Coast. So Portsmouth, New Hampshire was one of them, up at 61.54%. Encinitas, California, again, this is an increase in sales month over month, 36%. Sedona, Arizona, 15.79%. And Carlsbad, California, 15.69%. And Oceanside, California, 13.40%. And I talk about in the Substack that what seems to be what's transacting out there are these higher price homes. If you look at the details, which I post in the Substack from the National Association of Realtor, you can see the biggest increase in home sales is in the 1 million plus category, guys. And we know that the median income out there cannot afford those properties. They can afford around $225,000 as a median price. Okay, top cities with largest percent decrease in sales month over month, December to January. So this is a decrease. Cape May, New Jersey, down at 58.3%. That might be seasonal for them. Richmond, Virginia, though, this is wild. And I checked the numbers several times, down 40.99%. So Richmond, I have heard from everybody, has been holding up very well. When I actually passed by Richmond, I didn't have time to stop. I saw just new build after new build way out in the exurbs as I was coming in. And again, what happens is the builders need to move product. They're going to slash those prices. They're going to pull people from the center. And this is how this all kind of works together. Stamford, Connecticut, this is another one. Very shocking because everyone in Connecticut always yells at me. Negative 37.38%. So can't wait to hear what someone has to say about that. But again, it's cold. It's really cold. And the Northeast gets colder. But like I said last week, we can't blame everything on the weather. Okay, Atlanta, Georgia, down 33%. I kind of texted Travis and I said, I think we picked the exact right time to go to some of these cities. And then this is another one, Bentonville, Arkansas, another hot spot, down 32.43%. Okay, already running long. So I'm going to do the week over week increases in inventory and then do the top 10 for kind of year over year. But top cities with the largest percent increase in inventory week over week, and this is for 2/11 through 2/18. Hoboken up at 9%, still Hoboken. Costa Mesa up at 6.8%. Tupelo, Mississippi. I'm getting very worried about some of these cities in the South, places like Tupelo, up 5.68%. Denver, Colorado, up 4.52%. Palm Springs, California, up 4.55%. Okay, so let's get to our year over year. Top cities, large percent increase in inventory year over year. Number one, Hoboken at 110%. Maybe that's a data issue. I don't know. It's bizarre. But what's wild is people talking about, low vacancy in New York. That is not at all what I saw. And I've posted before an article about some of these landlords that are keeping some of these apartments off the market. That absolutely is what's happening there, because there's no way New York is as occupied as people. And maybe people have apartments. Maybe it's that they don't go to. Maybe it's money laundering. Maybe it's all of the above and the landlord's keeping the apartments off. But that city is a ghost town. And so not exactly sure about Hoboken, what's going on there. Bakersfield at 59% increase in inventory. Fort Myers, Florida, 56.2%. We know a lot of that has to do with Ian, but it doesn't matter. When I drove through there, for sale signs everywhere. Galveston, Texas, 37.43%. Fort Lauderdale at 32.58% and rising. Knoxville at 22.73%. West Palm Beach, Florida at 21.4%. Winter Garden, Florida at 21.33%. San Ramon, California at 21.25%. And Seattle, Washington at 19.62%. Okay, those are top 10 for increases in inventory. Okay, to get to our states that I can tell you I think are going to be some of my biggest areas of focus in this cycle, that's California, Florida, Texas, and Tennessee. Average inventory change month over month. California up at 9.32%, Florida at 11.9%, Tennessee at 1.59%, and Texas up at 5.94%. Average inventory change year over year. California at 3.36%, Florida at 22.4%, Tennessee at 17.08%, and Texas at 20.61%. Okay, listings for rent. So listings for rent were up 1.9% week over week and 2.31% compared to the 27-week average and 3.38% month over month. So a bunch of percentages. Point is, we're coming out of that trough that we saw in the holiday season from that November, December, and we're seeing increases in rent. And so top cities with highest percent increase in single family rental listings, 211 and 218 week over week. Cape May, New Jersey, 66.67%, Tupelo, Mississippi, 25%, Rosemary Beach, Florida, 13%, Newport Beach, California, 18%, and Raleigh back, with increases in, listings for rent at 13.4%. Okay, and then top cities with highest percent increase of single family rental to their 27-week average. I don't have year over year for these yet, and by May we will, but Phoenix up at 50.35%. That's an interesting number. Boston at 42.67%, Scottsdale at 33.82%, Portsmouth at 29.2%, and El Cajon at 28.44%. Okay, guys, so shared some Airbnb. I don't have January numbers, and actually probably going to have a couple of months here where I'm not going to have as much Airbnb information as I try to spin up a new data source, which is daily scraping, some property management firms. So looking forward to that, but it does mean that there's going to be a delay in what I'm sharing for Airbnb data. But what I can tell you is that inventory is increasing, even though this is, you're probably going to tell I'm kind of upset about this, but, the Fed has not updated its inventory numbers. Realtor.com came out with its report. So the data is there. And the data from the previous month was updated on January the 9th. It is February the 25th. Why do we not have January inventory numbers? I am very annoyed, but I can tell you what I'm saying is for sure that inventory is increasing, and I'll give you quickly just that summary before we go. But inventory for sale increased 1.2% week over week and 7.02% month over month. Compared to the average, it was up about 1%, and compared year over year is up 9.83% for the 80 cities I track. Now, I hope to do some, look at the historical. How do I track to their average increase? And that's, I hope to spend some time doing those correlations. But just 80 cities, and a lot of them are the top 20 MSAs, and we've got almost a 10% increase in inventory year over year. Okay, Fed, it's time to publish January numbers. It's almost March. Okay, guys, thank you so much for joining me again. As I, kind of display some of these stats around inventory, really am going to try after. So I've got some crazy life events about to happen. Finally going to actually settle here into this farm in Tennessee, move my stuff in. Believe it or not, I've been completely transitory since July. And also, have some trips coming up. So things are going to be a bit chaotic, but I really am going to try to stick to this 2 times a week. I'm also going to be working on a presentation style around these increases to share with you, as a PowerPoint while I'm talking to you to, meet everybody's feedback on that. But anyway, I'm going to do my best over the next several weeks. There might be some hiccups, so bear with me. But thank you guys so much for joining. Please reach out. This is a confusing time. The mania is crazy, and I'm sure there's somebody out there talking to you about how much money they've made on NVIDIA, guys. I've heard it all before. I have heard it all before. This is now really to remember, this is my third cycle of mania that I have witnessed in my professional career. Just guys, fear of missing out never works out. So in the Substack, I post a great interview with Adam Taggart and Grant Williams. If you watch nothing else, in fact, watch that video instead of my video later this week. Just please, to understand historical perspective and what's happening out there and how it is unsustainable, and if this persists without any break, that gap, that wealth inequality, there's going to be social ramifications. So if you have any questions for me, if you are forced to make a decision right now, I believe you could play some hardball out there. So please contact me. The best way to reach me is on Twitter at M3_Melody, MELODY, on Substack, M3 Melody Substack, and here on YouTube. And again, I couldn't do it without you. Thank you so much for the support, and sorry this went so long. All right, have a great day, everybody. Thank you so much.